I think if the bill were to be signed into law, it doesn't necessarily mean that there would be any immediate action by any of the U.S. exchanges with respect to Chinese listed companies. But as you say, in anticipation of something that might happen, certainly we may see some number of Chinese companies either just shift their listing to some other exchange, and it could be Hong Kong, and obviously we've seen a couple of very significant China-based companies do another listing in Hong Kong. There's been some talk about listings in London as well. So we may see a bunch of different things happen as this situation evolves.
Right, Neil, but how much can the U.S. derive from this exercise in terms of gaining an advantage when it comes to worsening U.S.-China trade ties and economic ties at this point in time? Because as the Peterson Institute of International Economics says, delisting these companies from U.S. stock exchanges is really a pointless exercise. It doesn't deny their access to the American markets, and it's not like it hurts China's growth.
There certainly is that perspective out there, and I guess investors. It's obviously a global market. People can trade. If you're a U.S. investor and you want to own the shares of a Chinese company that is delisted from one of the New York exchanges or U.S. exchanges, you can certainly come to Hong Kong and get the shares there or elsewhere. So it may not be. It may be perhaps more symbolic than real in terms of how it actually impacts the activities of investors in the markets.